The Trump trade surge continues. Bitcoin hits a new record high, and the US dollar bounced another 0.5% overnight. Expectations for another Fed rate cut in December grow a bit more wobbly, and wary ECB policymakers suggest rate cuts could help ward off negative US trade moves. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ's head of Australian economics, Boyton, analyses a surge in jobs in aged care and disabled care, which is lifting female workforce participation.
A lot of those structural or demographic factors, I should say, like the ageing of the population, certainly aren't going away and indeed are likely to become more significant and more evident over the next few years.
But first, in 5 and 5 with ANZ, the Trump rally continued through holiday trade in the US on Monday. While US Treasury markets were closed, the S&P 500 was up 0.25% at 4 a.m. Sydney Melbourne time. And the US dollar index was up by another 0.5% as investors placed bets on policies that will drive growth and the US government deficit. In contrast, Chinese stocks showed some weakness around disappointment about a highly anticipated stimulus announcement last week. Hong Kong's Hang Seng index fell 1.4% yesterday. ANZ economist Bansi Madhavani says the overhang of President-elect Donald Trump's win last week has been driving global markets, including Bitcoin, which reached a new record high overnight of $84,000 US.
In general, what we've seen is market has adopted this risk-on sentiment, which is supportive for Bitcoin in general. And specifically, the thinking investor segment right now is potential appointees in President-elect Trump's cabinet could have a very pro-crypto stance. So these are just, speculations and thinking at the moment, but this is what's fueling Bitcoin's rally.
With that US dollar strength, the Aussie dollar was down 0.11% at 65.73 US cents at 4 a.m. Sydney Melbourne time, while the Kiwi was down 0.1% at 59.61 US cents. Number 2. Amid the Trump trade euphoria, questions are growing as to whether the Federal Reserve will follow last week's rate cut with another in December. Bansi says guidance from the Fed, including that it will be closely watching 2 inflation reports between now and December, has been murky.
The market pricing for terminal policy rate hasn't really changed much. Market is still looking at 3.5 to 3.8% as a terminal policy rate. But where it comes down to a distinction is where market is pricing for December rate cut. Currently, market is evenly split between a 25 basis point cut and a no cut. So around 12 to 16 basis point of easing is priced in for December. So we'll have to see how data pans out in the next few weeks to get a sense of where the Fed would be thinking about its policy trajectory.
Number 3. The positive US equity sentiment transferred to European stocks overnight. The broad Euro Stoxx 600 index was up 1.1%. That's amid growing concern, however, about how the trading bloc can temper the negative effects of the new president's trade policy. An ECB member said overnight monetary policy will need to react.
So ECB member spoke about the policy rate now signaling to be around 2% by September next year. And I think that's very consistent with what we are thinking from the ECB as well. Our own forecast is that the ECB will be in a position to ease rates in a very progressive fashion going into 2025. And our own expectation of the terminal policy rate is at around 2% by September of 2025.
Number 4. Unlike in Australia, in New Zealand, workforce participation has dropped a bit as unemployment has increased. Here's ANZ's chief economist Sharon Zollner to explain why and what it means for the Reserve Bank of New Zealand.
People do tend to give up on finding a job when they get harder to find, but there's also a more positive spin in that insofar as some people seem to be going into higher education, which is good in the long run, but in the short run it means they're not available for work, and so that means that sort of takes the edge off the increase in the unemployment rate. So not a strong sign as far as growth goes, but it is fair to say that it does nonetheless represent a slightly tighter labour market than the Reserve Bank was forecasting.
Number 5. Sharon says that slightly tighter than expected labour market, but without too much extra wage pressure, is a factor reducing expectations for a really big rate cut by the RBNZ later this month.
The Reserve Bank would be perfectly happy with that. So it does look like the labour market is in a state that is consistent with inflation at target, so it's not a game changer for the outlook. It does perhaps pour a bit of cold water on those who are perhaps hoping for a 75 basis point cut from the Reserve Bank this month.
Sharon Zollner there. Now, in our bonus deep dive interview, ANZ's head of Australian economics, Boyton, has picked up on a big shift in the labour market. Aged care jobs have surged, and that's increasing women's employment in particular.
What we're seeing is very significant growth in those occupations. Indeed, if I look at a detailed occupation level, aged and disabled carers is the individual occupation that's seen the largest growth. Employment there is up 60,000 over the past year.
And how is that playing out in workforce participation?
What we're seeing is the age or the care workforce generally has a very significant skew toward female employees. And so when we then look at, say, employment by gender, we see that female employment across the care sector. And so here I'm talking a little bit more broadly than just that aged and disabled carers occupation. But if we look at the two industries that probably most closely map to the care sector, we see that total employment across those two industries, residential care services and social assistance services, has risen by 108,600, with female employment up 91,400 and male employment up 17,100. One of the interesting things about the care sector is that in recent years, and this was a point the National Skills Commission's Care Workforce Labour Market Study made, in recent years a number of people joining care and support occupations from outside the workforce has increased. If we then look at where labour force participation has risen over the past year, we find more significant increases for female participation than for male participation. So it seems to me that what we're seeing is an ongoing expansion in the care sector that is seeing significant growth in female employment given the gendered nature of the occupations in that sector, and then given the tendency sometimes for people to enter that sector from outside the workforce, that could be helping to explain part of the increase in female labour force participation over the past year.
And what are the broad drivers behind this significant increase?
I think there's a few things going on. Firstly, there is an ageing of the population. And if we look at the federal budget papers, some of the largest growing programs support for those with disabilities and also aged care. So I think it's those factors, those combinations, just, I guess, an ageing of the population and expansion in the support we provide people with disabilities seems to have lifted employment growth in the care sector for a number of years now.
And what's the prospects in the coming years for continued employment growth here?
I think it's difficult to see a big downshift in employment growth here. A lot of those structural or demographic factors, I should say, like the ageing of the population, certainly aren't going away and indeed are likely to become more significant and more evident over the next few years. So I'd expect to see ongoing growth in the care sector for the foreseeable future. And indeed, that was one of the conclusions of the National Skills Commission's Care Workforce Study.
And I suppose this sort of employment growth is relatively inelastic to what's happening more broadly in the consumer economy or in the export sector, and therefore not quite so connected to what's happening with monetary policy.
That's right. And I think that's part of the reason why we've seen, despite the RBA's interest rate increases over the past few years, why we've seen ongoing employment growth. That while employment growth, I guess, in traditionally private sector areas has slowed, we are still seeing ongoing employment growth in those areas of the economy which generally are publicly funded or attract a reasonable degree of public funding.
Adam Boyton there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, November the 12th. Catch you tomorrow with analysis of how Australian consumers and businesses are feeling right now. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.